The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks for tuning in to start your trading day, your trading week. We kick things off right now, and you're looking at an S&P positive by 2 points. All the markets technically in the green right now, but boy, quite an acceleration where we've been. They're talking about it in the Tiger's Den, man. Yeah, you're talking about negative prices recently, folks. Our man Jimmy saying down 3 straight sessions and 11 out of 15, right? Negative prices coming at you, especially when you look at just the acceleration we had from last Tuesday. CPI data up to 41.80, and just like that, folks, you give up 300 points. We're trading at 38.80. Just like that, if you take the price level of where we were at 4,050, okay, you're still talking about 170 points, and that's just from where we were prior to that CPI number. Taking all of that acceleration out, nonetheless, we've seen some negative prices. We got another week of action. We're coming into Christmas. Markets closed 1 week from today, December 26th. We got Christmas 6 days from right now, man. Have you finished that Christmas shopping? If not, get out there, man. Get it done. I'm sure Amazon can still deliver those packages right now, but I wouldn't be pushing things, as they say. And pretty cool how things fall in terms of we get off Monday this coming Monday, and then I believe we get off the following Monday. I'll pull that up as well, but I'm pretty sure with the first falling on Sunday that we may get off the second for that holiday. I'm going to check that one out to be certain, but nonetheless, we are definitely closed 1 week from today in the markets. We'll see how this week goes, man. This could be a pretty slow week, man. You got kids home from school, right? Maybe you got families going away, starting their holiday vacations, what it may be. My dad was talking about it on his program last week, saying, you get some real negative action this week. You got the trend going down into this week, okay? And then you got people stepping away from their terminals, and that could be a recipe for some real acceleration with light volume. And folks, just because there's light volume, sometimes that sets up for even more volatility because there's less players in the market. Okay, that gives opportunities for markets to be a little bit more irrational with less players in the market. And we'll see where we go, man. But nonetheless, we kick off this morning pretty flat across the board, but green prices on all the indexes. But we're talking about 2 points on the S&P. We're talking about 2 points on the Russell. You're talking about the Dow up 0.05% right now, and the NASDAQ 100 leading the way up 0.2%. We jump over to commodities. Crude, a little bit of a bid this morning. You got crude prices inching towards $76. We got the gold contract right at about $1,800. You talk about some volatility for gold last week, and where are we? We're just right where we were, back to prior to that CPI number. You trade up to 1836, you trade down to 1782, and gold is right back to $1,800 this morning. Silver contract up about 10 pennies, pretty close to, again, where we were prior to Tuesday morning, right? Silver at 23.43, and boy, you talk about volatility in silver, man. From 24.39 to 22.73, and we're right back to about 23.50 on silver. And notes and bonds, we got some lower price and higher yield. That's some interesting action driving the action this morning. We're right back to Friday's lows, and even on the 10-year. Now, this is especially interesting, folks, because we've been talking about this if you've been watching the program. Okay, where is this potentially rolling over? It's potentially rolling over right at the top of that channel line, man. So keep your eye on it, because you break through there. Could be a decisive break. That would mean maybe we really got a handle on inflation, and we got higher price and lower rates coming at you. This thing reverses. I mean, watch out, man. You ever head to the bottom of this channel line, we're just going to extend that line to the right. We've done it before, folks. All right. Back in June, you traded from 114 up to 122 and then traded to 108. Okay. So now we've traded from 108 up to a high of about 115 and a half. And yeah, don't put it out of the realm, folks. 106 if you trade to the lower part of that at least. And that would be a little bit of a shocker. But you shouldn't be too shocked with anything in this market right now, folks, because everybody is just making their best guess. Everybody is just putting their opinions out. That's what you really got to be sure of. Now, there's analysts who have been right. There's analysts who have been wrong. We're going to talk about one of the analysts that's been right, Morgan Stanley's Wilson, in a moment. because I like what he's been putting out, and he has been correct recently in terms of where this market's going. But everybody's kind of shooting from the hip, folks, okay? So when you see those inflation analyst estimates, et cetera, remember, they've been magnificently wrong in the past 12 to 18 months. There's nothing saying that they can't be wrong in the next 12 months. Keep in mind as we go forward, man. So you got the 10-year off about 20 ticks. That's correlating to a yield right now, 3.57% on the 10-year. You jump over to the 2-year. The 2-year, slight reversal. We're down about, what is that, 3 ticks or so? No, is that? Yes, about 3 ticks, 102.31 on the 2-year you're talking about right now. The 30-year down a full point and 12 ticks, right? Yeah, pretty interesting to see where these go, man. The 30-year, backing this up on a daily, pretty similar action, right? Interesting, they're rolling over on a similar action right at the top boundary of that channel line on the 30-year. We jump over to the currencies this morning. When we got some action in yields, we have a little action in currencies. Catching a bid from where we were just at about 4 a.m. You were pushing 104.10. Right now you're driving 104.62 in the dollar. We jump over to the euro. You got higher rates, you're going to have dollar strength, folks. Euro, backing off from the gain it got, would make sense, correlating. You were as high as 106.65, 106.60 we'll call it. You're back to about 106 in the euro. We got to jump over to the dollar yen, man. Dollar yen, 136.74. You put a little context. Now that's how you break out of a channel line, man, right? We'll see if we get back up and test that channel line. Well, we're talking about some lower price for the dollar yen, but keep your eye on it, man. Whether you're looking at the dollar index, whether you're looking at that yield, I would really be paying attention to that yield and that channel line that it is in, because it's going to be an important one, folks, depending on whether we hold that channel or we break well above it. We're going to find out, man. The VIX, a lot of talk about the VIX, rightfully so. I was talking about it last week. I mean, you would not know if I just showed you this chart of the VIX, which is basically after the CPI spike, and I said, what did the market do from Tuesday, Wednesday, Thursday, and Friday of last week? So yeah, it probably chopped around. I see some accelerations here. So you obviously had a pullback in the market on a couple occasions. But you know what? I also see a pullback in the VIX. So that would probably indicate that you got a pop in the market as well. Maybe you finished a little bit lower from where you were. No, it's been a pretty dramatic pullback. And meanwhile, we got the VIX stuck right at 2283. One of the arguments there is that people had bought insurance and they're not unwinding that insurance, no matter what is going on in any way as you get past that data. Nonetheless, keep your eye on it, man, because it is interesting that the VIX stuck at about 2250 right now, oscillating around that area, regardless of what's happening in this market, even when we got sell-offs. And as I speak, we now got all the indices slightly in the red. NASDAQ 100, shouldn't say all, NASDAQ 100 hanging on to the gains, but barely. And yeah, you put this thing on a daily, and I'm going to take some of these Fibonacci's off for some clarity. We went over this last week. If you didn't catch the program, folks, what I was talking about on some of these Fibonacci's is that every move lower, we've basically popped to about a 618. The first move lower this year down to March, you make it up to just above a 618. The second thrust lower to June, you make it up to just about a 618 to 4,300. You trade down to 36 to 3,500 area. Where do we just trade up to? About a 618. Retracement, and it's a pretty decisive break. We are now into the November 11th bar, that huge acceleration, November 10th, excuse me, right? Yes, November 10th acceleration. And where's the next stop, man? I don't know, folks, but I'll tell you, longer term, there's nothing stopping this market, I think, from going to 3,200. We'll see. We're going to talk a little bit about earnings. When we get back, we'll take a look at Morgan's Wilson, talking about earnings next year, because it could be a dicey one. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&Ps right now flat. We got the NASDAQ 100. You're up by 8 points. Dow barely in the red, along with the Russell negative to almost flat itself. Jumping back to this longer-term time frame, folks, taking a look at where we are in terms of trading right now at 38.77. You had the market make it down to about a 50% retracement. Okay, that spike low in October, 35.02, about 3,500. That's the 50% of the entire move higher during COVID. Now, you jump to the NASDAQ 100, okay? Just to put in context here, how possible it is that stocks pull back to a 618 when you're talking about the S&P. We already got there in the NASDAQ 100, folks. Okay, it is totally in the realm. Now, I know that growth stocks have paid the price first and foremost, but earnings are essential to valuations, folks. And even though multiples have pulled back on the earnings they're based on right now, which could change in the future as we come into some tough recessionary tendencies. That is one take, okay? Nobody knows what's going to happen in the future. We all have our biases. We all have our market expectations. And the reason why I love going over some of the takes is because they allow you to either digest that information, agree with the rhetoric, maybe factor it into your analysis, okay? It's not to say, oh, look what he's saying, he must be right. It's to get the thought going, okay, of what could happen. So Morgan Stanley's Wilson says U.S. profit could drop. We'll start that again. Morgan Stanley's Wilson says U.S. profit drop could rival 2008 era. Now, he's not looking for a 50% pullback because he's not looking for, as they put it, something like structural integrity or let's see what he exactly says. He's not looking for, he does not expect financial risk in the system, right? Systematic financial risk or signs of distress in the housing market. So he's not looking for those types of systematic problems that really drove the market down 50%. But what is he looking for? It's bear case forecast, okay? This is the bear case, but it's a case, man, and nobody knows where it's going to be. My dad was having a great conversation last week talking about real estate, and he had a caller on. And the caller was trying to make a decision, right? Whether they close the position they had or they hold it. He's saying, folks, you know, when he was in real estate last year, before kind of this whole rollover took place, you make the assessment. Where are you going to be if the market goes up 10 or 20%? How would you feel? Where are you going to be if the market goes down 10 10 or 20%. If you're okay on either side of that, that's one thing. But if you're not okay, if you get that type of pullback, if you're not okay, if the S&P goes down to 3,000 from 4,000, if you're not okay in equities, whether you're near retirement, if the market goes down 25% from where it's at, then don't be in it, man, because there is a distinct chance it'll happen. And don't just say to yourself, well, it's only a 10% chance. That's probably not going to happen. And if it does, I'll deal with it. Make sure you make the proper allocations, whatever you got to do, folks. You could even just ride it out for a year and put your money in fixed income for a year if you're really that worried, and whatever your financial position is, right? If you're in retirement, maybe it's just that retirement section of your portfolio. Maybe you have trading versus you have investing. Whatever it is, make sure, man, because there's a very distinct chance that stocks could accelerate lower. Now, you talk about channel lines. I've been talking about channel lines, right? Pretty distinct channel lines where we're bumping up against the upper boundary line of 4,000 to 4,100. Folks, the Dow last week was at 35,000 and change. It was trading at 35,000 about a year ago as it came into all-time highs a week later. Very rarely do you have the Dow within a week of its all-time high as everybody's talking about gloom and doom across the board. Okay. Now, to get into what they're talking about, though, they're talking about earnings. Their team is now leaning towards its bear case, though. It's not just the bear case. They're leaning towards that. And he's been spot on, man. He was a bear, and then he really called this acceleration higher that we've kind of got into that final quarter, right? He's kind of called this acceleration. I think he even called it a little bit higher potentially. But that, stocks could rally into the end of the year, fueled by the indication that potentially we have reached an ebb in the inflation and will begin to accelerate downwards as opposed to upwards. That will give the market some promise that going forward, the Fed won't be as big of a headwind. That'll provide a lift in equities, which we've seen a little bit, but now we're rolling over. Now, they're looking for S&P earnings of $180 per share in 2023, compared with right now $231. Okay, yeah, that is quite a haircut in terms of, what is that, 50? That's a 20%. It's more than a 20% haircut for earnings per a share. That, combined with the fact that the current equity risk premium is lower than in August 2008, even though valuations are higher, could see the S&P sinking to as low as 3,000 points next year, implying declines of about 22% from the Friday close. And again, this is not a gloom and doom. And when I'm talking about this gloom and doom here, that's not a gloom and doom, folks, right? Google, Microsoft, Apple, the big tech stocks, they're doing just fine. Their valuations got out of whack. We're dealing with generational inflation. And it seems like that it's very hard to imagine that we're going to get some super soft landing coming off quantitative easing and a Fed cycle that we've never seen, coming off generational inflation that many of us have never seen, and somehow the market is just going to rebound and the Dow is going to be within all-time highs within a week of it last year. 35,000, that was a heads up. It's like, man, is the Dow about to make all-time highs right now with everything going on coming into a year that a lot of analysts think earnings could be a big problem? And when you take a look at the Fibonacci's, folks, seems there are 618s all over the place in this market, man. And it seems pretty rational that you get one more acceleration lower on an earnings acceleration. Every acceleration before this one has been on a Fed cycle. When's the actual acceleration lower on the economy, right? Are we not going to get one? That seems a little outlandish. I know I'm thinking big picture here, but I'm just trying to give you some thoughts to think about, folks, because nobody has all the answers. And that's stuff that has me a little bit paranoid right now with the market near 3,900. We're coming into a year where everybody is feeling the effects of inflation still, folks, okay? The Fed is hell-bent on getting inflation under control to the point that they are well ahead of where the market thinks that they need to be in terms of their rates, how long they're going to stay there. And we're just beginning to deal with the impacts of earnings on companies as they weather this. The market has really not dealt with earnings. They've dealt with inflation. And yes, some companies have paid the toll. You've seen some of the retail stocks pay the toll, right, for their inventories. Amazon paying the toll in a big way. But just keep it in mind, man, and make sure you're positioned, because I would have a little bit of cash available if you're looking for buys lower in this market. One thrust lower, man, If this is an A to B, C to D, we'll finish up this segment as we come into the opening bell, folks. But this last acceleration, all right, I'm going to take the longer term one off there. Oops, excuse me. Let's remove that. I'm just going to focus on the last move in the market that we had. Now I'm taking just the bodies versus the tails, okay? But that was from the high in August of 4,300 and change down to 3,500. Folks, that's 800 points that market traded. Now I just chose 3,600, which will put it at about 700 points, okay? We spiked to about 4,100. And if this is an A to B, C to D, and you take 700 to 800 points off of this high, now what's the high? If you get up to the 618, that's about 4,040. You take 800 points off that, you're at 3,240. You take 7, you're at 3,340. It's right in the realm. All we need is one more acceleration in A to B, C to D that we got from August to October, and we are at near 3,200 in this market. We'll find out, folks. We got a lot to talk about. It's Monday. We'll be right back for the opening bell.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You got an S&P up by 2 points to kick things off. Let's drive back to the 5-minute chart to see the open right now. Trading at about 38.82. You get the NASDAQ 100 barely in the green, Dow barely in the red, and the Russell barely in the green as well. Let's see how some of the commodities are trading. Crude hanging right at about $76. You got gold just about $1,800. We'll jump over to the dollar index real quick. Dollar index right now trading about 104.57. And we jump over to notes and bonds as they're getting some movement today so far. We'll see where they're going. Yeah, right at about 114.07. And again, keep your eye on it, man, because they had a great chart of the indices in their channels. There's a lot of clean channels in this market right now, folks. So I don't know if they're going to break through them, but at least you have them on your charts. You keep track of them. That's a rollover taking place, man. We'll see if that trend continues. Surprising a little bit that we wake up and you got the market flat and you got the 10-year down almost 19 ticks right now with yields back at 3.57%. That's like up 10 basis points from where we were last week, man. Yeah, so maybe they're believing that rates might have to be a little bit higher for longer, like the Fed is telling us, man. We will find out. All right, let's jump back to some of the stories we got up this morning. Finishing the conversation on Morgan Stanley's Wilson real quick. So he's talking about that leaning towards the bear case of 3,200. If you're looking for areas to hide in, folks, healthcare, staples and utilities, and underweight discretionary and tech hardware stocks. Seems pretty reasonable if you're thinking the market has that in store for it. Okay, another little gloom and doom article. Stock market's brutal year leaves Wall Street with little faith in a rebound. Just talking about what people are putting out there. Now, I look at this chart, folks, and I say, man, this is bonkers. The market really, just in terms of regressing to a mean of some degree, probably deserves a little bit more of a pullback, man. Because you go back to the year 2002, folks. We have 3 negative years. That's including 2008. What happened? Okay, now that was a 40% decline, but that's also including living through a pandemic the last few years, right? But the returns are astronomical in some of these years. Just jumping through, back to 2003, 30% almost. Then you go to 10. You got what? 12 to 15 in 2006. If you just go after 2008, yeah, we got 20+%, 10+%, an even year, 10, 30% in 2013, 10%. You break even in 2015. You're back to 10. You're back to 20. You lose a little bit in 2018. And then you go 29, You go 16 and you go 27. All we've done, folks, is given back some of last year's returns. That seems very, very profitable, to put it lightly, in terms of staggering returns since 2008. And all we do is give back some of last year's returns. And that's the S&P 500. Obviously, it varies with the Dow versus the NASDAQ 100. But in general, okay, there could be greater losses coming at you. Now, I want to get this chart as well. This is Bloomberg Intelligence, okay? This is the fair value model. Shows the S&P 500 is going to be little changed in a year. You got the bull scenario in the green. Let me blow this up. Bull scenario pushes the market up to near 5,000. Okay, what is that? A 20% return, okay? That's likely too. The reason why I'm not focusing on that is because I think a lot of people will be fine if the market makes it up there. Not a lot of people are super leveraged to the downside, especially when you talk about everybody should be fine when you're trading, okay? Because hopefully you're keeping your risk reward in place. But I know we have a lot of people out there that at least have a portion of their portfolio in investments for retirement, okay? I don't need to stress to you the importance of making sure you're okay in retirement if the market goes up to 4,800. I think you'll be okay. I don't need to stress the base case scenario that the market's where it is in a year. Yeah, you're giving up, 4 or 5% that you could be in fixed income. And that's one thing to consider, man, because if you just go base case, right, you're giving up opportunity cost in this market because a lot of analysts are saying, man, it's going to be pretty tough, right? Bear case, they call it the stagflation scenario. Here, talking about 2,500, man. That's a tough one, man. And I think a lot of people would be in shock if this market drops 1,500 points from where it's at in the next year. In pretty dramatic fashion, man, to say the least. So pay attention, folks, to where you are in that market. And make sure that you're okay if that happens. Because my dad had a great conversation last week, if you're listening, just talking about the way that he thinks about it. And it's a great way to think about it. And I probably learned from him because I look at it similar, right? How am I going to be positioned if it goes up? How am I going to be positioned if it goes down? If you are sometimes, right? Let's say you got $1 million and you say, okay, where am I going to be if it goes up to 1.2 million? Say, I'll be okay. Probably won't change much. I'm pretty good with $1 million anyway. If it goes to 1.2, I'll be a little bit better off. Well, what if I said to you, and what is that if it goes down to 25? That's 1,500 points. geez, what's that, a 35% decline potentially, right? If that bear case here is 35%. So what if I said to you, well, what if it goes down to 650,000? How are you going to be? Say, well, man, I might have to go back in the workforce if it goes down to 650,000. I say, well, what are you doing with $1 million in the market if you're risking having to go back in the workforce, if you're only risking it to make an extra 200 grand that's really not going to change your quality of life? Those are the types of ways you want to think about it when you examine whether it can go down to that price level, folks, because it is possible, okay? And nobody is sure where it's going. I think the market may be heading to 3,200. 2,500 is a whole nother deal, man, when you get into that type of scenario in terms of how far it will go, because that will shock a lot of people, because you're talking about getting cut in half now. That is a 50% pullback, right? From where you were at 4,800 down to about 2,500. Yeah, so pay attention, man. And like we're saying in the den, yeah, CDs, man, I just pulled them up. I mean, a 1-year CD right now, folks, is 4.7%, okay? A 9-month CD is 4.7. A 6-month is 4.55. You tie it up for 3 months, you're talking about 4.35% a yield on that CD, right? Yeah, now you talk about that. Those are great returns, man, in a market that you might be a little bit worried about. Now, where it goes even further, though, okay, I'm clicking around, is that you don't even have to be in a CD a lot of times right now, okay? Because right now, even in a money market, you should be getting about 3.5% for a reasonable money market. I know it's going to be higher and it's going to be dramatically lower if you're with like some big banks, but even a money market, you're going to be pushing 3.5%, just keeping cash. And whether it's a brokerage account, maybe you got it in there. So be aware of all of those, man, because in that scenario I just laid out, there's a lot of people in that scenario. They've already lost, 20% of their portfolios maybe. And that's where things get compounded. And one of the other things, it was just a great conversation. I keep saying it, and I'll have to find what day it is maybe, so I can let you know. But talking about the last thing you want to do is be making decisions when you're scared too, because then you're in big trouble, man, because then you're not making rational decisions. You're making them out of fear. Maybe you're selling when you shouldn't be selling, right? So if you let yourself get into that position and then you're acting out of fear, then it becomes even more difficult to make the correct decision. So right now people are down 20% and they want to say, well, yeah, the Fed's probably got it under control. Don't fool yourself to think it can't go down another 35, man. I've gotten quite an education for some of these stocks going way below price levels we probably ever thought possible. And that is what you always want to be aware of, man. Because what's the phrase? The market can remain irrational far longer than you can remain solvent or hold out the position. It's basically what it is, right? No matter if you're right or wrong, the market can be irrational for much longer than maybe you'll be able to hold that trade to make sure that you realize the returns that maybe they are in the long run. Because, boy, the swings we're getting in both directions, not indicative of a strong market when you get 300-point swings in the S&P downside in a week. We'll be right back, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for Dave's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the markets a little bit of negative action on the open right now. Let me jump back to where we are. We have the S&P's negative by 3, NASDAQ rolling over a bit. You get the Dow up by 42 points right now. Pretty much one of the only things we got in the green. You get the crude contract giving up some of those gains. 75.50. Was it about 76? We got the gold contract at about 17.99. We jumped to notes and bonds. And yeah, it's continuing, folks. Lower price, higher yield. You see that drop off even at 9:30, right? We were just trading at a price of 114.08. You're down another 4 ticks just since we opened the opening bell, making new session lows right now for where we are on the 10-year, and that's correlating to a yield now 3.58%. Man, it would be so interesting if this thing just rolled over completely again, right? We said, hey, why doesn't anybody believe Chairman Powell when they say, listen, inflation is sticky. We need to get it under control. We're going to be here for higher, for longer. We're not even thinking about cutting. Maybe it's going to take another time. One of the possible scenarios that can play out for sure. Jumping back to talking about the markets, folks. Now, this one is talking about higher interest rates in 15 years are derailing the American dream. There's a lot of gloom and doom on Bloomberg this morning, man. I like the data within these articles, though. So some of the data in here is talking about higher interest rates, of course, putting a hurting on people, man. You take a look at mortgage rates, right? Yeah, you could say a little bit of a pullback from where we've been. But, boy, the Fed's not even done hiking, man. Look at that spike higher, compared to what we were doing in 2008, for instance, right, where it was quarter, all of that. Yeah, this is like 75, 75, 75. We just hit 50. The only question is whether we're getting 50 or 25 in the next meeting, okay? That's the question. Now, even in the once red hot market of Tampa, a few people showing up at an open house is now considered a good day. People are just waiting on the sidelines. There's that angle of things, but I also told you, folks, I'm not far off from Tampa. I'm right near Lakeland, Florida, and they got a development, man. And you know what? I'm going to try and find that development at my next break to see if I can show it. And if I can't, I'm going to have it ready for tomorrow because it is mammoth. And you got Lennar. I believe you have D.H. Horton in there as well. We walked into a Lennar home. They're saying they've sold 90 houses already, and I got to believe them to some degree because every house they're popping up that's new, I'm seeing people move into, man, which means they're selling them, which is remarkable. But home costs, that might be the scariest chart of them all, folks, okay? This is the monthly mortgage payment on a median priced U.S. house with a 10% down payment and a 30-year mortgage rate. That's like straight up reasonable across the board. Maybe you can make the case people are putting down 20. I'd make the case, man, if you get a real pullback, you should probably be putting down less than that if you can, folks. You pay that mortgage insurance, but if you're getting a good deal, you're putting down no money on that. You're reaping the benefits of whether it's some tax benefits in there. You're reaping the benefit of holding a equity, an asset, I should say, that's worth $200,000 to $300,000, sometimes putting down 3%. For instance, you buy a $200,000 house, you put down $6,000, a 3% put down. Now you're going to have some closing costs. It might be higher, right? But if you get the pullback, okay, you buy that at the peak, man, you're in big trouble. Obviously, you're underwater. But that is a tough one to stomach, folks. This goes back to 1999. And you were at about $1,000, oscillating around that area. You got down in 2012 to $680. $680, folks. Americans were able to buy a median price U.S. home with 10% down and pay $680. Fast forward 10 years later, and it's 4 times that value. That's crazy, to put it lightly. So there's a lot in the way of this economy, man. You know, how does that happen? Rental prices are going to be high because that's high. And I don't imagine that one cratering either, folks, but I could see it pulling back a little bit for sure. All right, let's jump around to some of the individual equities, see what we have moving this morning. I guess we got to talk about Tesla real quick. Elon polling his Twitter fans and asking them whether he should step down. The Twitter fans saying that, yes, he should not be the CEO of Twitter anymore. And Tesla catches the lift, up 3%. I'd be very careful on that one, to put it lightly as well. At some point, there probably will be a buy. But, boy, if the economy is in trouble, and I think China is going to be in trouble too, folks, because, you know, they're allowing COVID to spread. But I think I saw one statistic today that says they've admitted to 2 deaths or something like that. So they're hiding whatever's going on over there. And they have some trouble in the meantime. Yeah, my dad was talking about this. What did he say? I think he said something like $60. Maybe he was talking about back here, Tesla potentially, because he got a call on I think it was Friday, and they asked him if it was too late to short Tesla. He said, nope. You can give him a call this afternoon if you want to talk to him, man. But don't think it can't go lower, folks, just because Elon's pulling Twitter. And, you know, I was looking at a little bit of that last night, and there are bots everywhere, man. So it's interesting to see what's going on in terms of some of the analysis of the votes going on and the number of the votes taking place in terms of on Twitter. Yeah, take it for what it's worth, man. Tesla gets a lift of 2.5%, but can you even find a lift on that chart? Exactly. All right, what else do we have going on in terms of articles? Meta, yeah, this is a real one. So they're hit with an EU antitrust charges over marketplace service. Just doesn't stop for Facebook. A formal complaint from the European Union antitrust watchdog for allegedly squeezing out classified ad rivals by tying the Facebook marketplace to its own social network. Not surprising that they would try and do that. It said Monday it issued a so-called statement of objections to Meta, paving the way for potential fines and changes to the firm's business model. The only argument here is that maybe, now Facebook's down 2.3% on that, okay? But the market's been pretty well aware that they potentially have some antitrust suits coming their way, especially from the EU in terms of how they do business. They got some problems with targeting, right? They got some problems with everything going on right now. The only silver lining on Facebook could be that, yeah, they're going to be around, folks, and you are back to prices on Facebook that you were trading at basically in the beginning of 2016. Now, that was after it ran from 17 to 177, okay? But we're talking about 6 years later for Facebook. They basically have every single person on the whole planet when you got 3 billion people using their apps. Instagram is still cool with the kids. You got TikTok, man. TikTok's going to be facing grief for a while, and they should. You know, we all give up a lot of privacy when you use an app like Facebook, right? When you're making choices to use that app, folks, for free. Well, how do you think they're making money? They're using data, okay? And whether you're okay with that or not, there's a certain degree of being okay with saying, you know what? I want to be able to use as much technology as I can. I realize I'm giving up some of my my privacy by, like for Apple, I mean, can you imagine what a company like Apple knows about you when I use their phone for everything, for texting, for all that stuff, right? So I'm giving up that privacy to the companies I'm using it for. And I understand that they may be able to do stuff with that I don't like, and that's where regulations can be important. That's where government can be a good thing, folks. I know it gets a bad rap recently, but here's the difference. I'm okay making that decision. I am not okay letting the Chinese government have that data and then letting them. On a broader use, not good national security-wise for China to have data on every single person in the whole country, okay? And just not good from a privacy aspect that I don't trust them to the same degree. I do not want the Chinese government, man. I don't got TikTok on my phone. I got everything else on my phone, okay? Don't have TikTok. So that is going to continue, and that would be a headwind eventually for Meta, I think. Still down 2.4% today. One more segment, folks. We'll be right back. Don't go away.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets rolling over a bit. S&P's down about 0.3%, 11 points in the red right now. You got the NASDAQ 100 negative by 74 points. We just break below where we were on Friday in the NASDAQ 100, 11,256. That low, we got the Dow barely holding on to gains right now at 33,145. And I did find some information on that development. So Polk County, Bartow, Florida is technically where you would be. A quick look on the chart, man. I was trying to blow it up. It's not the cleanest chart out there. But this is basically the entire development, folks, to put it lightly. You're talking about, this article talks about an additional 562 home division, okay, that was approved. I believe this is in February. Well, that's September 2021, all right? This one, no, that's September as well. So September, but this is in addition to 836 homes, okay? So last year, they approved Wind Meadow South Subdivision, currently under construction. This is what I'm talking about, nearby where I am. And that is in addition to the 562. You're talking about 1,400 homes. Now, Bartow, Florida only has about 20,000 people, okay? Now, they get into, in terms of the specifics of the schools in here, right? Can they even handle them? This is going to yield, they think, 4,390 average daily trips, the roads, the service, all that stuff, man. We'll see how that goes, because there is some worry about that, rightfully so. The schools, etc. There's an elementary school across the street. That's going to generate an additional 117 elementary students. Now, it's interesting where they, I'm sure these are off somewhere, but that's 1,400 houses, folks. And they're only talking about 117 elementary students, 49 middle school students, and 81 high school students. That doesn't seem rational in terms of the number they're talking about, 1,400 houses. The elementary school can accommodate an additional 168 students, and they're pegging it at 120. That's bumping up against the area, right? And let me tell you, folks, that Spencer Holland Elementary is pretty much across the street, and it is almost criminal how they run the traffic with the cars just on the road. I've seen multiple accidents. So nonetheless, what are they doing though? They're selling them, folks. They're selling the houses somehow. So it is what it is, right? Thanks so much for starting your trading week with me, folks. Stay tuned. We've got our man Basil Chapman up next. Have a great Monday, folks. We'll talk to you tomorrow.